Hi, this is David Skrika, July 17th, June 17th, 2024. So caught up on a lot of work over this weekend, some new ventures I'm starting. So now stock chart of the day will be up and running, and I'll make up for it I'll just probably from now to the end of the month, the next 2 weeks, I'm going to be basically doing, you know, these, um, these updates every single day. So you can see this is a stock chart of Charles Bell. Hello, I hope I'm pronouncing that right. Great Italian name, by the way. You can see shows the US stocks versus foreign equities. And you can see that they have now outperformed for 16 years. And I think a lot of this has to do, even though this last move here has been during a period of higher interest rates, but that's been driven by the Magnificent Seven. So it's been driven by this move into these big cap tech stocks, combined with people just wanting to own so I'm just taking a sip of coffee, wanting to own stocks and the economy where they printed trillions of dollars, they set rates at zero. They didn't do that in places like India, Brazil, etc. But that's made these foreign stocks really cheap. Remember, in places like India and Brazil, Indonesia, there's real growth going on. China's slowing, but the Chinese equity market in January, remember I talked about it, that I was a big NXS fan, and Michael Hutchins did a documentary on China with MTV in July 1997, June 1997, right before the handover happened, and stocks were back to those levels. And there has been growth in Hong Kong, even with the issues politically now in China since 1997. So those are the kind of things you have to look for. I should have bought Hong Kong stocks at the time because they've had very nice rallies since. But you can see this 16 years of underperformance. So you can see that. So I think now is the time to get in. Like when I wrote my book in 1998, I talked about, and in the early 2000s, I talked about buying, actually 1998 was that's the Russian crisis. And you can see the outperformance of the next 10 years. Like the Russian market, which collapsed in 98, I think it went up like almost like 100 times from its lows in ruble terms. Like you're not going to get performance like that in the US markets in the developed world, right? And and remember, this is just international stocks. This is not just emerging markets. Like emerging markets really really outperformed even more here. So this includes European markets, etc. But even like in slow growth economies like Italy, etc., the markets are much, much cheaper. So at some point, you're going to see value there. Like Germany, I think at the bottom in 2022. And there were fears that Germany would even be able, be able to find enough power. I think it got down to like 6 or 7 times earnings. Like that's how cheap some of these things got. So really, I think the opportunities at some point here are going to be outside the US. And it's like 2000, where basically you had the bubble going on in the US and you didn't want to be in the US for the next 10 years. And I think that's going to be kind of where we're entering. And I know we have these dynamic companies in the US, but I think that's what's going to happen. And especially, if resources start another bull market like they did in the 2000s, well, then again, a lot of the emerging markets that are resource producers, obviously we can't buy Russia right now, but like Brazil, like Argentina, and Argentina obviously has the political backwind too. A lot of the South American economies, Chile should do well, even with some of the political problems in these countries, because they're really just resource based. Canada, finally, when they oust Mr. Trudeau and Poliver comes in, that should really help the Canadian dollar and Canadian markets and oil and gas, etc. So anyway, that's today's stock chart of the day. So we're going to look at Nevada King, one of our sponsor companies. Of course, I've always said this company is kind of close to me because their main property, the Atlanta property, I kind of helped facilitate the sale of this property to them. So you can see here they've had some excellent holes, like some big intervals with some gold of 6. This one is 30 meters of 6 grams gold, 73 grams silver. 48 of 3 and 33, 6 of 7 and 75, 6 of 11 and 110. So these are really, really, really high grades. For whatever reason, the stock isn't really reacting. I think one issue we're getting in Canada is we're having early tax loss selling because, Mr. Trudeau raising the capital gains tax means that some people may do tax loss selling to offset a future higher capital gains tax by June 30th, or some people are selling winners right now because they'll get to pay that lower tax. And maybe they'll sell the losers because they'll pay the lower tax on a lower amount, you know. So I don't know why this hasn't done a little better, but these are excellent here, and I don't want to get into all of the details. I'll issue this press release. I'll put the press release up, etc. On the website, but and you can see like these include some of the higher grade intercepts within those holes, et cetera, et cetera. So here it talks about here. I will mention this: the mineralized intervals, RC holes defining northerly trending high grade zone, along with the hanging wall of steeply west dipping West Atlanta fault. The true mineralized in thickness estimated between 25 and 50% of retorted intercept length. Blah blah blah. Donates angled hole. So anyhow, this is where you're seeing where these holes are being drilled, et cetera. Right. And you can see this is where it is kind of at depth, So the next phase obviously is to continue to drill this, and then uh uh and then start expanding the resource, because resource, this is a past producing line, but we can see that there's only 460,000 ounces in gold, and inferred and measured and indicated, and 142,000. So they only have about 600,000 ounces of gold. So they have to obviously increase that. But it looks like for what we're seeing here, well, that's the here, but you can see the measured and indicated, there's a 460 and there's a 142, and contained ounces are much higher. So that's what they really have to do, is get this measured and indicated and inferred up to the contained ounces, because then they could potentially have millions and millions of ounces, and of course that will increase the valuation of the company. I think at 30 cents, it's a pretty good punt down here. It's a pretty good opportunity, and of course I own some, and like I said, they are a sponsor company. So that's it for today's stock chart of the day. We'll have more. I mentioned last week doing more seasonality. So after today, what I'll do is probably I'll just do seasonality every single day. We did the seasonality of gold. Now we'll look at the seasonality of the stock market tomorrow. Today, when I just saw that underperformance of international markets against U.S. markets, or outperformance U.S. markets, I thought that was an interesting chart, and I just wanted to put that up. So everybody take care, and we'll be talking to you later this week.